In a world just packed with complex blockchain technologies, sometimes you wonder, what if there was a platform already delivering real benefits, tackling actual problems now, not just promising some far-off future? Well, today we're doing a deep dive into Avalanche. It's a layer 1 blockchain that's definitely been making some significant waves. Our mission here is really to pull out the key nuggets of knowledge from the sources we've gathered. We'll unpack Avalanche's core tech, look at some, frankly, fascinating real-world uses, understand its token and economics, and get into the critical legal and regulatory stuff it has to deal with. Think of this as your shortcut to getting genuinely up to speed on a platform built for speed, scale, and secure apps. All right, let's get into the core of it. Fundamentally, what exactly is Avalanche? If you had to give the elevator pitch.
Okay, so at its heart, Avalanche is a decentralized, open source, layer 1 blockchain platform. It came out of Ava Labs, launched back in September 2020. And the main goal, right from the start, was to build a network that could handle fast, scalable, and secure decentralized apps and smart contracts. Really offer an alternative to some older systems that just couldn't scale well.
Interesting. So a layer 1, but designed specifically with that speed and scale in mind. What's unique about its architecture? I read something about it not being just one blockchain.
That's exactly right. And that's what's really quite fascinating about it. Avalanche uses this unique setup with 3 core blockchains that kind of work together. First, you've got the X chain, the exchange chain. Its job is basically managing assets, sending funds fast.
Okay, just for assets and transfers.
Yeah. Then there's the C chain, the contract chain. That's where all the smart contracts run. And importantly, it's EVM compatible.
So that's the link to Ethereum stuff. Makes it easier for developers.
Precisely. They can use familiar tools. And finally, there's the P chain, the platform chain. That handles network coordination, things like staking, validator management, creating new blockchains called subnets. This separation, this sort of division of labor, lets Avalanche optimize each function, makes it super flexible, super efficient, especially compared to chains trying to juggle everything at once.
So practically speaking, for a developer or even just someone using an Avalanche app, what's the real benefit of having those 3 chains? Is it just faster or?
It definitely leads to better performance because you're separating the traffic, right? Asset transfers on the X chain don't clog up smart contract executions on the C chain. It inherently boosts transaction speeds. And yeah, that EVM compatibility on the C chain is huge. It means Ethereum developers can jump over pretty easily. No need to learn a whole new language from scratch. It lowers the barrier to entry,
That does sound like a powerful combo. Now, what about this Avalanche Consensus mechanism? That seems key to the speed they talk about. How does it manage high speeds and decentralization? It apparently blends classical and Nakamoto methods. What does that mean in simple terms?
Right, it's quite innovative. So, Nakamoto Consensus, like Bitcoin uses. Super robust, very decentralized, but kind of slow.
Yeah, definitely slow sometimes.
And then you have classical consensus, much faster, but usually needs a smaller known set of validators, which can hurt decentralization. Avalanche does something different. It uses this randomized subsampling. Basically, a small random group of validators quickly checks a transaction. If they agree, boom, it's likely final. If not, they ask another random group. This repeats super fast until there's overwhelming agreement. It's this iterative, quick sampling that lets them claim thousands of transactions per second with finality in like a second or 2. You get the speed and keep strong decentralization. Best of both worlds, sort of.
Thousands per second. Wow. Okay, let's put that in context. How does Avalanche stack up against, the elephant in the room, Ethereum, especially on those things users really care about?
Yeah, good question. That's where Avalanche really tries to differentiate itself. Looking at our sources. First, transaction speed. Avalanche often finalizes in 1-2 seconds. Some sources mention maybe 30 seconds for really complex stuff, but compare that to Ethereum, anywhere from 13 seconds to 5 minutes. It's a big difference.
Okay, speed is one thing. What about cost? Ethereum fees are notorious.
Exactly. Fees, Avalanche often boast average fees around maybe a cent, 0.01 cents. Ethereum, fees can be pennies, sure, but they can also spike to, over $100 when the network's busy. Now, to be fair, complex smart contracts on Avalanche might cost a few dollars sometimes, and we saw reports of higher fees for specific things like harvesting rewards, but generally it's way cheap.
Huge difference there. And scalability, transactions per second?
Right, scalability. Avalanche is designed for up to 4,500 transactions per second. Ethereum's currently around, 12, 15. So a massive difference in capacity.
And you mentioned flexibility earlier.
Yeah. customizability, and flexibility. This is the whole subnets idea. Developers can launch their own blockchains on top of Avalanche with their own rules, their own validators maybe. It gives businesses way more control for specific applications. Plus, again, that EVM compatibility for easy integration. Ethereum, while powerful, doesn't really offer that level of built-in customization.
So bottom line, if you're just learning or maybe thinking of building something or even just want cheaper, faster transactions, Avalanche is positioned as a really practical, accessible option right now. Is that a fair summary?
Absolutely. It's focused on that practical utility, trying to smooth out the friction points that have kind of held back wider blockchain use.
Okay, moving beyond the tech specs, the real proof is in the pudding, right? How is Avalanche actually being used? Where is it delivering those benefits today?
Yeah, this is where it gets really exciting, seeing it in action. Our sources point to 7 pretty solid examples showing the impact across different industries. These aren't just ideas. They're live applications solving real problems.
Okay, let's dig into those. That lemonade insurance one sounds really compelling. Crop insurance for farmers in Kenya. How's Avalanche powering that?
It's a fantastic example.
Yeah.
Lemonade uses Avalanche to automate crop insurance for thousands of smallholder farmers there. They use oracles. Those are like trusted data feeds bringing real-world info onto the blockchain.
Like weather data.
Exactly, like local weather conditions. If the data shows, say, a drought hits a certain threshold defined in the policy, the smart contract on Avalanche automatically triggers the insurance payout. It gives these farmers a crucial financial safety net, instantly, transparently. Especially important as climate change makes farming riskier and some traditional insurers are pulling back. It's trustless, automated help when it's most needed.
That's incredibly powerful. Okay, shifting from weather disasters to disaster relief in general. Deloitte using Avalanche for FEMA payments. That sounds like it could speed things up significantly.
It really does. Managing FEMA public assistance after disasters is usually a very complex, paper-heavy process. Avalanche helps automate parts of it, makes it more secure, more transparent. It streamlines getting critical relief funds where they need to go, which is becoming more vital as, sadly, natural disasters increase.
All right, let's switch gears to something maybe more everyday. Ticketing. Dreamus in Korea, part of SK Planet, using Avalanche for their OK cashback ticketing app. That's huge, 21 million users. What's the problem they're solving?
Right, they're tackling issues everyone hates with ticketing, scalping, fraud, fake tickets. By putting tickets on Avalanche, every transaction is recorded immutably.
So you can prove it's a real ticket.
Exactly. It creates a verifiable trail, making it much harder for scalpers and counterfeiters. It improves the fan experience and protects the industry. And apparently, they just expanded this model to Turkey recently, partnering with TickSpace and Passelig.
Interesting. Okay, from entertainment to high finance. Entain markets using an Avalanche subnet for tokenized assets. Can you break down tokenized assets simply and why it matters for structured finance?
Sure. Tokenized assets just means representing real-world things like loans, mortgages, maybe even a fraction of a building as digital tokens on a blockchain. Entain Markets is a marketplace for trading these tokens, built on its own dedicated Avalanche subnet. The goal is more transparency. You can see the history of the asset on the chain, better liquidity, making these things easier to trade, and more efficiency in a market that's worth trillions but can be quite opaque. It might even open it up to smaller investors by allowing smaller investment amounts, which is tough traditionally.
Got it. And gaming, off the grid. This AAA game using play to own on Avalanche. What does play to own actually mean for the player?
It's a step beyond just play to earn. It means players can gain true ownership of digital items they earn or acquire in the game, like a unique weapon or a special skin. These items are often NFTs on Avalanche.
So you actually own it, not just use it in the game.
Right. You could potentially trade it, sell it, maybe even use it in other compatible games down the line. It adds a whole new layer of value and engagement to the time and effort players put in.
Then there's e-commerce and loyalty. TYB using Avalanche to help Shopify merchants connect with fans. How does that work?
Yeah, TYB stands for That's Your Brand, offers this loyalty platform. Brands on Shopify can use it to issue digital collectibles like NFTs or special tokens built on Avalanche. They can reward fans for doing things like posting on social media, writing reviews, referring friends. It's about creating deeper connections and rewarding engagement in new ways beyond just simple point systems, a new way for brands and their biggest fans to interact.
Okay, and finally, Blockticity tackling counterfeit paperwork. That sounds like a huge problem, $4.5 trillion annually. How are they using Avalanche for that?
It's a perfect use case for blockchain's transparency. Blockticity mints certifications as NFTs on Avalanche. Products get a QR code, scan the code, and it links to the NFT, which verifies the product's authenticity and provides an immutable record.
So you can instantly check if it's legit.
Pretty much. It makes faking paperwork or product origins incredibly difficult. They've already used it for, I think, $275 million worth of hemp and cannabis products, and they're looking at things like sneakers, even fruit. Anything proving authenticity and origin is crucial. Looking at all these, what really strikes you, for me, it's just the sheer range. Insurance, finance, gaming, supply chain. It shows Avalanche isn't just theory, it's being applied to solve tangible problems across the board.
No, I agree. It's impressive to see that breadth of actual deployment. So let's talk about the fuel for all this.
Yeah.
The AVX token, how does it fit in? What are the tokenomics behind it?
Right, AVAX is central. It's used for paying transaction fees, for staking to secure the network as the unit of account across the subnets.
Yeah.
It's the network's native currency, basically. In terms of supply, there's hard cap, 720 million AVX total. That's it. And transaction fees are burned, which makes it potentially deflationary over time.
Okay, a fixed supply. How much is actually out there now?
As of early August 2025, roughly 422 million AVX are circulating. That's about 59% of the total supply unlocked. If you look at the fully diluted valuation, FDV, which is the market cap, if all 720 million tokens were unlocked, it's sitting around $17.3 billion, gives you a sense of the potential scale. Allocation-wise, a huge chunk, 50%, is earmarked for staking rewards. That really incentivizes participation in securing the network. Then you have allocations for the team, 10%, the foundation, 9.3%, public sales, community funds, and so on.
And how are these tokens released? Is it all at once?
No, there's a long vesting schedule extending out to 2030. It uses both cliff vesting, where a chunk unlocks after a set period, and linear vesting, where tokens unlock gradually over time. Often these unlocks are tied to specific actions or milestones. This is pretty standard, designed to keep the team and early backers aligned with the project's long-term success. The next scheduled unlock, by the way, is August 15th, 2025, specifically for those staking rewards. Historically, there's sometimes been medium volatility around unlocks, but it depends on market conditions and who's getting the tokens.
That makes sense, managing the supply release. So for listeners holding AVX or thinking about it, how do they actually get involved in staking and earning those rewards?
Good question. There are two main ways. You can be a validator or a delegator. Validators run the nodes, process transactions, create blocks. They're the core security providers. You need to stake a minimum of 2,000 AVX to be a validator, and you have to keep your node online and responsive, like over 80% of the time, to get rewards.
Okay, 2,000 AVX is quite a bit. What if you don't have that much or don't want to run a node?
That's where delegating comes in. You can delegate your stake to an existing validator you trust. The minimum to delegate is much lower, just 25 AVX. The validator does the work and you share in the rewards, minus a fee they charge minimum 2%.
So you can still participate with less AVX.
Exactly. For both, though, there's a minimum staking or delegation period of 2 weeks and a maximum of 1 year. And here's the key thing. Once you lock your funds for staking or delegation, that's it. You can't change the amount or duration, and you can't withdraw early.
So it's a commitment for that chosen period. Good to know.
Yes, definitely something to be aware of before you commit.
Okay, shifting back to growth. What's new? Any recent partnerships or developments showing momentum? Seems like there's always something happening.
There really is. Just looking at recent stuff from late July 2025, Grow Finance launched on Avalanche, aiming to bring over $250 million into institutional on-chain credit. They're bringing in big players like Janus Henderson, which manages hundreds of billions. That's significant institutional interest.
Wow. Yeah. Institutional credit on-chain.
And then Umio chose Avalanche to launch what they're calling the first layer 1, specifically for AI agents. That's tapping into the whole AI boom.
AI agents running on Avalanche. Interesting.
Yeah. And on the consumer side, Uptop expanded its NBA loyalty program, which uses Avalanche tech, to the Detroit Pistons after a successful run with the Cleveland Cavaliers. Plus, looking back a bit, those earlier partnerships with AWS for infrastructure and Arkham Intelligence for analytics were also pretty major foundational steps.
So a lot happening across different fronts: institutional finance, AI, consumer apps, which inevitably brings us to the legal and regulatory side. With global reach comes global rules, right?
Absolutely. This is a massive ongoing challenge and focus area for any major blockchain. Avalanche operates globally, so it has to navigate this complex web of international rules. You've got the EU with MiCA and GDPR, which have big implications for crypto assets and data privacy. Then Asia Pacific, it's a real mix. China with bans, Japan and South Korea with strict but established regulations. The US, has its own framework. It's a patchwork Avalanche has to constantly adapt to.
And the big question in the U.S. context is always, is the token, AVAX, in this case, a security? How does that whole Howey test apply here?
Right. The Howey test is the SEC's go-to. Let's see how AVX potentially fits. 1, investment of money. Yes, people buy AVX. 2, common enterprise. Arguably, yes, its value is linked to the platform's success. 3, expectation of profits. Yes, people hope for price increases, staking rewards, etc. 4, efforts of others. Yes, value heavily relies on Ava Labs and the wider developer community.
So based on that, it sounds like it could potentially be classified as a security.
It could be. And if the SEC formally decided that, it would trigger a whole lot of requirements. Registrations, specific tax rules, trading limits on certain exchanges in the US. It would be a major hurdle. However, there's a strong counter-argument. Many argue AVX functions more like a commodity because of its utility. It's used to do things on the network pay fees, secure it via staking, create subnets. The argument is that its primary purpose isn't just investment.
So it's about utility versus investment expectation.
Kind of. And Ava Labs is actively engaging with regulators, trying to make that case, emphasizing its role as a utility token within a decentralized network. It's a really critical ongoing discussion for them and many other projects.
Beyond just the security classification, what other legal or regulatory risks does Avalanche face?
Well, there's the general regulatory uncertainty. Rules can change, sometimes quickly, in different countries. What's allowed today might be restricted tomorrow. Taxation is another complex area. How staking rewards or capital gains on AVX are treated varies hugely by jurisdiction, affecting user incentives. Then there's KYC AML, know your customer, and anti-money laundering. Platforms built on Avalanche, like exchanges or NFT marketplaces, likely need robust KYC AML procedures to comply with financial regulations and prevent illicit use. Failure there can lead to big penalties.
Right, preventing misuse is key.
Definitely. And related to that are privacy concerns, especially with regulations like GDPR in Europe, balancing transparency with user data protection. And everyone's watching legal cases like SEC versus Ripple as the outcomes set precedents that could impact AVX and others.
It's clearly a complex landscape to navigate. Finally, on a practical note, what about security? Are there audits or measures in place?
Yes, security is obviously crucial. Our sources confirm the core components, like the Avalanche bridge code, the nodes, the smart contracts, have been audited by Halborn, which is a well-regarded security firm in the space. And more recently, in July 2025, Octane integrated with Avalanche, specifically to help embed security practices right into the development cycle for projects building on the platform. So there's both external auditing and ongoing internal focus.
Okay, so we've really covered a lot of ground here. From Avalanche's unique three-chain architecture and its impressive speed and low fees, through to those diverse real-world uses like insurance in Kenya, ticketing, finance, gaming. We looked at the AVX tokenomics, staking, recent growth, and finished with that complex but vital legal and regulatory picture. It leaves you thinking, given Avalanche's clear focus on real-world applications and getting institutions involved, how might their proactive efforts to work within this tricky global regulatory system actually shape how quickly and how broadly blockchain tech becomes part of our everyday lives? Something to ponder. We really encourage you to keep exploring how these technologies are changing things, evolving constantly, and really starting to impact the world around us.